Hey, welcome to the closing beat, everybody. Happy Thursday to you. Wednesday. It's not Thursday yet. It's Wednesday. You got the day right. How's it going out there? All is good? Everybody having a good day? That's my Jamaican accent. Hey, we're financial advisors here at Jazz Wealth. Hope you're having a good day out there. While other advisors are playing checkers, we're playing chess, and a lot of clients are starting to ask about goal setting for the new year. Remember that this is cute, right? You set a goal. Yeah, I'm going to get buff. You know, I'm going to eat right. No, you're not. Setting goals is not just about putting money somewhere or saying, I want to buy a house or I want that fancy car or I want to go more trips or whatever. Setting goals but the strategy around it as well. We want to make sure that you have the most amount of dollars possible. That means talking about taxes, talking about efficient use of how you put your money and where you put it. It may mean not taking any risk with investments because markets can go down as we saw today. So be sure to take it one step deeper and just ask a little bit more questions there. Our Wine and Wealth tomorrow is, that we do every Thursday for clients is actually going to be on that. The questions you should be asking to hit your financial goals, the data that I may need to make sure we're using or doing this efficiently instead of just kind of winging it. You know, a client was like, I want to buy a house. I'm like, okay, tell me more. What should I buy now or should I not? I'm like, well, let's talk about it, right? So love getting into those details if you're interested there. Also, tomorrow is officially the shortest day of the year. That means it only gets longer from here. But shortest day of the year is actually tomorrow. So congratulations there. If you notice the day goes by pretty quickly, that's because it's the shortest day of the year. I need to remind you that the shortest day of the year is getting close to the deadline for doing your conversions, your QCDs, things that you may want to do. You need to take your RMD, etc. If you need to get that done, make sure you do it ahead of time. Don't wait till the last second because a lot of brokerage firms will not accept it. They have deadlines as well so that they can process things. Let's dive into things here today and see what's going on. All right, S&P. Remember yesterday, we're talking about risk to reward. That's why we do these things. I love being able to point something out ahead of time instead of saying, I knew it. No, come on. Everybody can do that. Risk to reward is the key here, right? Where is the risk? The risk is on the downside. If the risk is on the downside, then maybe people want to go into bonds, which I don't know if you saw bonds today. Hey, yields went lower again. That's a good thing. And that's because people realize the risk is technically in the market is for it to fall. And maybe this is not the end of it. Maybe it is. I don't know. But risk to reward, because initially we were up. So ask yourself, the stock market is up and we're already overbought. Remember what I shared with you yesterday, right? We have an almost historic amount of stocks that are considered overbought. So this morning we start moving higher there. And all we really want to do is say, when the market is overbought, we just remain skeptical. You know, that's it. It's not a bad thing. We don't say the market's going to fall. Oh my God, what are we going to do? No, we say, hey, this morning, 77.2%. This was 71.8. It got up to 77.2% of all stocks in the S&P were overbought. Okay. 6 of 11 sectors hit new 52-week highs. 6 of 11. So more than half of the S&P sectors hit new 52-week highs. You know, it's been almost 3 years since we could have said that happened. Okay. What happened after that? We had a pullback, right? And so you look at the markets here being overbought, and it doesn't mean they can't continue to be overbought. It just means there's not enough meat on the bone. Why would I put new money to work there? It makes it really, really tough there. A little bit of a sales pitch. I'm going to do it. I'm going to put it. I don't do this, but just imagine if we were your investment managers. Would we have just chased all of that? No, you see what I talk about every day. This is part of building credibility. So imagine if someone can keep you from doing things like that. We all focus on returns, and of course, we want the biggest returns as possible, but we all focus on that. And the other side of it is, what if we can stop poor timing of investments? Not timing the market, just poor timing of jumping into something that's not trading at a discount there. So very, very careful there. I want to go back just 1 second because I have some notes. 6 of 11 sectors hit new 52-week highs. It's been about 3 years since we've done that. I said that. Now, the S&P performance tends, we're going to focus on this today, tends to be choppy over the next 30 days. Okay? That doesn't mean we collapse. That doesn't mean we have a 50% rally. It means it's choppy, and that's okay. We know that the volume is going to be lower and still is kind of low here going into the holiday week, but it means that we don't expect a lot of chaos in there. We don't expect a lot of to the upside chaos, right? We expect some back and forth, and that's okay. The worst sector, by the way, anytime that you look and you find that 6 of 11 sectors, or just more than half of the sectors in the market, have hit new 52-week highs, the one that's at the bottom, the weakest sector, I think it was technology last year. This year, it's clearly energy. It's the worst performing sector there. It has the worst performance going forward. And I wouldn't have thought that, right? I would have thought like, okay, you pick on the laggard there. But no, the relative weakness is something to pay attention to. So in this case, it's going to be energy. So energy is your lagging performer this year. It is not near 52-week highs. You can clearly see that. It tends to be, historically, the weaker link going forward. There can, of course, be moments of strength and all that good stuff, but yeah, you get the point, right? If we go over to the Dow gets all the headlines because it's a big number, down 400 plus points on the day, almost 500, right? So that gets the headlines, but it's the same thing, right? It's overbought. The majority of those stocks have found and have had their rally. The reward to the upside is limited, but each day the risk of even a meaningful, like regular, no alarm type pullback is greater, 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 right? So what are we going to do? Assume that there's like 2% left for a 5% pullback? No, we don't want to participate in things like that. We want to sit patiently and wait. Like we talked about yesterday, sit on your hands. The NASDAQ going to be a little bit weak today as well. Everything was. There's no way to sugarcoat that. I do want to point out that the Russell had the biggest pullback out of the group there. Small cap value stocks, index, whether you trade the index there or your small cap growth stocks as a whole, they all said too far, too fast, right? And that's one of those themes, like if there's ever one thing you can be really confident in, it's if something goes up too far, too fast. Not just the stock market. I'm talking about car prices, the homes in your neighborhood, eggs, for God's sakes, right? We saw that. If prices of things go up too fast, we have less and less buyers on the way up. You can't go too far, too fast. You always find yourself breathing and getting a little bit of a reprieve in those prices there, okay? So careful with those things. Now, moving around. I talked about bonds already, short-term, long-term, across the curve there. We saw lower yields. The 10-year got down to 3.853, rather interesting there. Oil basically took the day off, and volatility found itself waking up, which if it didn't, there'd be something broke with it or something. So you kind of see what's going on there. Now, the key to this, overbought stocks. People agree now that they're overbought. We could see that in the S&P. That is essentially agreement that stocks are overbought and therefore some profit or something should come off the table. It is not, notice how it was not like, oh my God, China's falling apart. Oh my God, the economy slowed down. No, it's just overbought. There's no news like headline that can make you think the world is about to end. That's an awesome position to be in if you think about it, because it means those opportunities are coming to you. You're not chasing them. Please do not chase. That is one of the biggest, I would say, detractors. I don't know. I don't have a fancy word. I was trying to sound like I was fancy there, but it's one of the biggest things that pulls from your total returns over the long run. And they're little changes, little things you can do, but they make a world of difference. All right. For those of you that like to chase these absurd rallies, I'm going to try something here. No, I don't want to go there. I want to go here. Okay. Tech. So tech is up over 50% this year. So I'm going to just go, what happens? I'm going to do something here. Just hang with me. Let's see if this works here. All right. I'd like to know, how often does tech go up more than 50% in a year? And I'm just looking back as far as I can. It doesn't go back 40 years, but I just put it there. There's one other time in history, just one, right? Tech is the leading sector this year. It's up 53.74% at the moment. All right, last time this happened, 1999, 65%. The year after, it was down 41% there. Here's what I want to look up. I want to take this out because we know, think about how this works. We're looking at a year calendar. So if I say, tell me what the forward 1 month performance is, and I get it. We're going to use one data point. This is not magic by any means. I get it. One single year we're using to analyze, not a good subset of data, right? But just for fun, if I say, let me see the whole calendar year's worth of performance. Okay, it was up 48 something percent. Okay. Now, if I want to see what the next month looks like, for each example that I share today, that's January, right? We know that that 1 month is January. If I say, show me the next 3 months, we know that that's January, February, and March, right? So it's kind of cool to do this at the end of the year. And again, we have one stinking data point here, but just to show you, we have a banner move higher, clearly a record at that point, 1999. We get to the end of the year. We go well, I don't care if it's 1 week. I wasn't really trying to show that. But if we say 1 month, how many times, there's only one to use, so we'll expand from here, but it was not positive. Just that one time, January, after that rally, we pulled back 6%. Kind of seems like a lot, but it's really not that big of a deal. The recovery, the pullback gave you an opportunity to play for a rally. Ultimately, we went into the dot-com bust and everything. Let's hope something like that doesn't happen again. But you get what I'm saying. Let's try something different here. Let's get some more data points. Consumer discretionary is up 39%. So not quite 40%. I'm going to use 35%. All right, we'll go for the year. Again, if I do this and this works, we're going to see... well, not a lot of data points. We got 3 this time. Okay. So consumer discretionary. Only one of these currently beats the performance that we have on tap, 39%. Nonetheless, okay, let's say it goes up 35%. Great. All right. If we look forward, 100% of the time, it was positive in the next year. So if you just held it, you did just fine. But we're not talking about that today. We're talking about people that see it and want to participate. I want to chase it. Dustin, is now the time to chase this. Let's see what happens here. I'm going to take the day. I don't really care about the week. I want to see months if we can get it. All right. So we have this amazing rally. We know at the end of a year, you're probably going to be fine, right? Momentum will continue. But are there opportunities along the way, meaning a better point to buy into consumer discretionary if you felt so inclined, right? 1 month. Every time it was down. There wasn't one positive one. And granted, I know it's 3 data points in this case. It pulled back. One shot here in the 3-month time period. Over the next 6 months, look, there is opportunity for pullbacks so that you don't have to chase. So when you come over here and you just put in whatever you want. So, oh, that looks so good. Look, I want to buy that. Don't you think we should be buying some of that, Dustin? Well, it's a limited data set, but no. Let's be patient. We're going to have an opportunity. Last one I was going to do is industrials, because I thought that was kind of odd. It's up 15.5%. So let's go greater than 15% in a year. And we're going to say same thing. We just want every data point we can get. So we'll go back to the beginning of its existence. Okay, so this is not as uncommon as I thought then. All right. So here we go. 20%, 29, 16. All right. So we've got a little bit of data to work with. This is even better, actually. 70% of the time, the next year is positive. It averages 6.15%. All I want to know is, do I chase it now or do I wait for opportunity? Risk to reward. Is the reward dry? Is there not enough on there for me right now? Do I need to wait for a pullback? Let us go. I actually don't know what the answer is. So we'll go over here. We got a month and so on. Okay, so let's search this data. And, okay, so cool. Look. So anytime these sectors have these really strong moves, I don't have to chase, right? You could do it with the market too, but over the 1 month time period, we have basically just a handful of gains there. 40% chance that it's going to be positive. Average gain is a pullback. 40% over 3 months, 40% over 2 months. That gives you a half a year to sit and wait. Now you look good. A lot of these, you look good when you start holding for the long run. If you're a buy and hold person and you've already bought, okay? Right? Maybe you add a little bit here and there. You know there's pullbacks coming, so maybe I'll add a little bit on those pullbacks. But you don't have to chase, right? If I can stop you from chasing, right? If you bought in the last couple days in the S&P, I'm sorry, I don't know what else I can say. I'm not legally able to say, stop it, don't. You just walk away, turn it off, right? But think about that. If something's running away from you, what's the probability that there's an opportunity to buy at some point when it comes to you? Anything else you do that with in life? Anything. How many of you are sitting out there, I would buy a house. You know, I don't know, maybe I'm investing in some real estate or something. That sounds pretty cool. Maybe when prices come down. No, are you saying, I see these prices, I'm going to go, I want in. I see the interest rate, I don't care, I want in. No. right? The Christmas gifts. You're out there buying a gift set. You might have had an idea, but that thing's twice as expensive now. You said, well, I'm going to go buy this one instead. Maybe they'll be just as happy. I'm sure it'll be fine, right? You do that. But when it comes to the stock market, we go, I don't want to miss out. Get me in. Let's go. Everybody's going up. Why are we not going up? What are we doing? Let it come to you, right? Let the good times come to you. All right, let's talk about a few stocks in the news that don't have a lot, and then I'll get out of your way here. We'll take questions if you have any. Feel free to post them in the comments there. The stream is slightly delayed, so we'll let that catch up while I talk about FedEx. FedEx goes into earnings, was up 60% year to date there at highs, basically. Love and life, everything's fine there. They miss earnings by 5%, and revenue was off 1%. That'll do it. Down 12% for the day. The key there is if you read the headline, you're going to see something like FedEx reports earnings that were weaker than expected, revenues missed, and they lowered guidance. What is that? If they lowered it, did they lower it a lot? Like, tell me the details here. It's really kind of like the Fed. They changed their wording, and that's what happened here. And if you look at the transcripts there, their revenue was cut. The wording, right? When they say they lowered guidance, they just changed the wording in their phrasing there. They said, previously we had said we were going to have revenue that was about flat. So those are previous words. Strike that out. Now it says revenue that is low single-digit decline. That's the problem, right? So when you see they lowered guidance, I mean, that's fancy. Okay, well, they lowered guidance, man. That's why the stock went down. Yeah, but what'd they say? What exactly, what is this? Did they say this is the end of the world? Amazon's taken over and there's no more FedEx? Or did they say, you know, we're seeing some slowing in the economy across the board there? Express, ground shipments, all this stuff. We're seeing declines there, but we're going to be fine. It's not going to be a banner year. Yes, that's all I want to know. Is the pullback worthwhile or is it not there? Typically not. Oh, they're also buying back $1 billion worth of stock, but nobody cared. Goldman Sachs in the news there. I didn't catch this one. This is one that wouldn't be a headline if it weren't such a quiet day there. They're going to change up some of their management committee for the on the investment side of things, but they're probably promoting from within, so it's not that big of a deal. General Mills with earnings here. Oh, okay. They reported better than expected earnings on weaker revenues and hence lowered their guidance going forward. Yeah, just a little bit, right? Unfortunately, that's how they started this whole thing, so they're making bad worse, and that's what happened there. We can make it real simple. Not going to pull up a ticker symbol here, but because it was such a quiet news day, we learned that if you drive a BMW, you're likely to drive drunk, as compared to any other car that you would drive. What was it? Three DUIs per 1,000 BMWs on the road. I don't know why. But I just thought, I was reading through the news and like, yeah, sounds right. I don't know. You know, so if you drive a BMW, maybe let somebody else drive this holiday season there, because I think the cops are looking for you. Something's going on there. Either that or it's maybe the young, like, spoiled kid that just got his BMW, driving a little crazy, a little bit something to drink, learning a lesson there. I don't know. We will see. All right, questions here. Let's see if I can get some of your questions. Okay, I'll tell you this before we look at any stocks or anything. If you had a portfolio of stocks and you noticed one or two of them didn't really fall today, like not a lot, hey, that's good news. You want to monitor that. If that continues, then you know you got yourself a good one there. If it even does pull back a little bit, maybe that's one that you want to look at. Maybe I'm going to add to that one or something, you know? I don't know. What are your thoughts on Mercado Libre? Okay, that's kind of an example, maybe, right? So obviously very strong, everything's good there. It has chosen not to participate on the last run of this rally, right? Especially in the NASDAQ. So it's really not, you know, the NASDAQ was straight up. This decided, I'm going to hang out here for a little bit. Today, we see some profit taking, but not so bad here in this one. This is one I would say, I don't know. It seems like it's willing to hold up there, right? It's chopping around. It found that less buyers were less interested faster than in the NASDAQ. So I don't know that I have the best read on that one. I wouldn't be nervous at this case because most things just gave you a good pullback today. You need some AI program to read conference call transcripts, get the best details. And yeah, they have that. There's a handful of those built into platforms and stuff. You can even tell it like just only tell me what's changed or help me with any questions wrapped around like subscriptions or whatever you want to look at. Car repair is expensive for BMWs. I wouldn't know. And I don't care to know either. You sold some covered calls on work, expiring January 19th, $3 premium, average price 31, 155 shares. Covered call, man. All right. So that's what you chose to do there. And 40, you sold them today, I'm assuming, or you have had them or something. Got a nice out of the money call there. Nice fat premium. And 31 is, okay, cool. Nice. So you sold one covered call. Not complaining. Yeah, not bad. Yeah, Doc, you can get that stuff. There's, I'm not sure what they cost, or if you got, I'm sure you got to pay for them, but basic money waster. Yeah, every car has like some kind of thing. Hey, interesting. Just from memory here, I'll let you guys guess because I let Eric guess, and he couldn't guess. Now, if you've seen the study, don't say anything. But what car has the safest driver? What brand? Right? So we're not going down into like the Honda Accord, right? It would just be Honda, but that's not the answer. What brand has the safest driver? One guess. You take one guess, tell me what you think. I'll move on to other questions there. You think China is, so that's coming up a little bit. You got a lot of chaos going over there. I'm not a fan, right? Because I pay attention to all that Chinese stuff going on over there that for some reason our media just won't talk about. They have major banking rules that they're applying towards the real estate sector, and that hasn't played out yet. There's going to be some bank issues over there, just so you know. So I'm not a fan just yet. I like the discount, something I definitely will watch. Yeah, there you go. So we're going Volvo. That's a good guess, honestly, because of their marketing. That's not the answer. Subaru, not the answer. Toyota, no, good guess though. Yeah, I'll give you that one. Honda's a good guess. Mr. Bishop's got the right idea, going outside the box a little bit. DeLorean, yeah, but no, that's not the answer. That's a good, nobody got it. Eric didn't get it either. It's Pontiac. Pontiac, Mercury, Saturn. Come on. I mean, is there a Saturn out there anywhere? Pontiac is officially not the safest car. It just has the least amount of like problems with people driving it. So people don't drive drunk. They don't slam it into walls. They don't rear end you. But that's what it was. Yeah, I know. That's where I clicked away. I said, oh, okay, what's happening here? Anyways, I know. You don't have to tell me. You don't have to tell me. Cody, we got something?
Pontiacs are crazy. Yeah, I don't know. On that, or you wanted to guess it at leaderboard?
You have a Pontiac?
No.
Can you name one Pontiac card? Just car?
Pontiac GT something was coming to mind. There's that. It was a pointy car. I remember it. It's kind of crappy. Well, I don't remember.
So no. Yeah.
No. But Jaroslaw is your leader in the Guess the Dow, one of the last ones of the year. He is a client. He's the only client on the board. We got Jaroslaw, Aaron, David, Frankie, and Johan.
Love it. Some nice round number guesses there, taking their shots. If you want to play jazzwealth.com/guess the Dow, can you name one Saturn for me?
Outside of our universe, I'm not sure.
No. And do you know who Dave Matthews Band is?
I learned about them today. You gave me an extensive history lesson on how much you love them, and I believe you also said Nickelback were like those are your two favorite. And it was
stop it with that. No, I didn't.
I
didn't. I just was shocked that Kevin here had never heard of Dave Matthews. Like I played all the songs. Like this one, no, nothing. Doesn't know him. Pontiac Firebird. I wouldn't have guessed the Aztec, but I do remember that because it had the tent that came out of the back there. I remember the marketing for that. But honestly, I couldn't name one Saturn. And my wife had a Saturn. It's one of her first cars. So
Grand Am. That's what I was thinking. I was thinking of the old Grand Ams.
Yeah. Well, that's the type of day it was around here. Just watch the market pull back and go, Pontiac? My goodness. All right. I will wrap it up there. You guys enjoy the rest of your day or evening. Tomorrow, Wine and Wealth. We're going to talk about your 2024 goals and go specifically through the right questions to ask, the right approaches to take, how to strategize, right? Let's make sure we do it a little bit more efficiently than others. You guys enjoy, and we'll see you tomorrow.